Obviously, a lot to watch comes after Friday. We get this surprisingly strong jobs number a few months after people thought we were dipping into recession. How do you kind of put it all together? And how is the economy set up? The market seemed to be trying to handicap a reacceleration in growth. How's that possible in year 11 of an expansion?
Well, that's a good question. And we are seeing a reacceleration. And Friday's job report, no matter how you look at it, was a blockbuster. Not only the headline number, 266,000 new jobs, and with adjustments, it's actually 307,000, which is an astonishing figure. I mean, astonishing at this late in the recovery cycle. But also some of the internals. I mean, average hourly earnings growing 3.1%. We'd like to see it higher, but that's strong. Inflation continuing to be absent. GDP deflator 1.3%. And then you look a little further, you see things like temporary employment agencies reporting all-time record activity, job openings at near record levels, and obviously the unemployment rate itself. So the implication is we're going to see higher growth next year. Ed Hyman, who's our really good macroeconomic analyst, is now projecting 2.5% real GDP growth next year. And you look at that and you say, how could that be? But then you see that real consumer spending is running at about 5 to 6% growth. And that's obviously, or I shouldn't say obviously, but it's a function of the higher consumer net worth we've seen now over the past year as the market has rebounded and other factors. Mortgage rates 100 basis points lower. Yeah. So this is really powerful stuff. And the question as to how it could be happening this late in the cycle, I personally think you have two factors, and one I'll also mention. One is, I think it validates this thesis that Professors Rogoff and Reinhardt put out about 5 years ago, that every now and then we have a financially driven recession rather than a conventional business cycle recession, and they tend to be much deeper. But on the other hand, the recoveries tend to be much longer, and I think that's one reason. The Great Recession was just so deep, and the financial crisis preceding it. Secondly, starting about a year ago, we had a big round of global stimulus, monetary easing. Very big round. I mean, For example, you just saw the Fed balance sheet is growing again. And that is now, with the usual lags, boosting growth here and actually elsewhere. And the third factor I have to say is, economics to some degree is an art and not a science. And I think a lot of people really, and I would say I'm one of them, don't quite know how it's this strong this late.
Right.
In light of that, and certainly I know the impact that all of the trade tariff stuff has been having on places like manufacturing, CEO confidence, business investment, et cetera. But in light of all of that, the fact that for the last 18 months plus, we've had rounds of tariffs, higher tariffs put into place. We've heard that was really essentially going to be the end of the world and it was going to spell economic doom. The fact that it hasn't, what does that tell us?
Well, it tells us a couple of things. As we've all said so many times, the export share of the U.S. economy is 12%. Is very low. And so the degree to which tariffs can hurt the overall U.S. economy is limited. Secondly, I think there continues to be an expectation that they're temporary, that they're not permanent, and people, to some degree, whether it's investors or consumers, are looking through them. And I personally think they are temporary.
Supply chains are moving, right? I mean, companies think that they may not be temporary if they're moving their supply chains.
Well, I think there's a lot of factors that go into supply chain location. Yeah. Because one thing that's not temporary, it's a good question, is the U.S.-China tension as a whole.
Yeah.
I just think the tariff phase is probably temporary, although, everybody has different definitions of temporary. And the other thing is, I think there is going to be a détente in trade for the near term. I don't think the tariffs that are scheduled to go into effect on December 15th, our additional tariffs, are going to take effect. I mean, we'll see. Only a few days to go. I don't happen to think they will. So I think we're kind of in a treading water phase here, where tensions are not going to rise, but they're also not going to disappear. And I think people have gotten comfortable with that.
But you have been somewhat constructive on the idea that we would figure out a deal.
Right.
Are you less so now, though? I know you're saying you don't think December 15th tariffs are going to go in, but it's been a lot of time that you've been coming on sort of saying, well, it's got to be there. It's got to be there. It isn't here yet.
Well, if I don't say that, maybe you won't have me on.
We'd always have you on, Roger. There's so many different things to talk to you about.
I know, I'm kidding. Well, you're right. I thought they would make a real deal I mean, a global deal, U.S. and China agree on overall deal before this, and now it doesn't look like there's going to be one for a period of time. But the degree to which I think I've been consistent is neither side wants a blow up. And I think the fact that the tariffs probably won't go into effect on December 15th, the fact that China recently has shown some accommodations in terms of treatment of soybeans, for example, I think shows that both sides are trying to keep the tensions under control. I still think that President Trump probably before Election Day would like to say we've solved it and make a overall deal. But of course, he recently said maybe he won't, and maybe it'll extend into what he thinks will be his second term. So good news, I don't think the tensions are going up.
Right.
Other news, you're right, there's no overall solution here yet.
Go ahead, Bitt.
Yeah, we're heading into an election year. You served in a number of Democratic administrations. You're a New Yorker for a very long period of time. Right. You know Bloomberg pretty well. I got to ask, do you think he's got a shot?
I think anything can happen. So if you look at the polls right now, you see the possible scenario that each of the first four primaries, Iowa, New Hampshire, Nevada, South Carolina, could possibly be won by a different candidate, because different candidates are leading in these different states. If that ever happened, and it would not be the likely scenario, but it's just possible, then you'd have the most wide open race, at least in my lifetime. And you'd have the still unlikely, but possibility of no first ballot victor at the convention. In that kind of unlikely but not impossible scenario, anything can happen, and Bloomberg would have some sort of chance. Now, he's taking, we all know, a completely unconventional approach to this, not entering the first few primaries.
Right.
Parenthetically, nobody has become the nominee, I don't think in my lifetime, who has not entered those primaries. So history is against him, and a lot of other things are against him, not the least of which is his standing in the polls. But I don't think it's impossible, given how wide open the race is. Is it likely? No. Is it impossible? No.
Is the general at this point wide open? I mean, obviously, what we set out in terms of the economy suggests it's the president's race to lose, given all the other historical inputs. Is that going to change over the course of 9 months?
If the president were to lose, it would be one of the greatest upsets, at least historically speaking, in the history of the country, for two reasons. First, only one president, at least in my lifetime, who is running for re-election for a second term for himself and for his party has lost, and that was Carter, losing to Reagan. Because George H.W. Bush, losing to Clinton, he was seeking a fourth term for his party in the White House. So only once has that happened, at least in my lifetime. I wish I were younger. Secondly, the economic factors. I mean, as some smart person said to me the other day, much smarter than me, his approval rating ought to be 60% given these economic factors, and that was before Friday's jobs report. So, but it's trending right around 40%, actually 41 when I looked at it this morning. So losing under these circumstances is highly improbable, and by the way, most of the prediction markets have him winning.
Yeah.
So logically. But he should be at a much higher approval rating, and it raises the question about his own, the views of him personally.
All right, given that point, we've been spending a lot of time focusing on what it would look like if, say, a candidate Warren won the election, what the next 4 years would look like for the financial markets. What would it look like with President Trump for 4 more years?
Well, I think you have to say it'd be a lot more of the same. It would. I mean, we know President Trump very well right now. He's not going to change his stripes. He's a very strong figure. He's a very contentious figure. He believes in a combative approach. And I think he'd probably be even more combative in a second term because he'd be liberated from the need to seek election again. So, but I don't.
Will the market continue?
Pardon me, will the market?
Does the bull market continue? Do we get another 4 years of growth, of strength?
Well, anything's possible, but I mean, as a betting person, would you say we're going to have 4 more years of recovery? You'd probably say not likely.
Okay.
But I would not say it's impossible. And probably markets would greet his reelection the actual day after pretty favorably, given how well they performed during the first part of his presidency. I mean, we still have, 11 months to go before Election Day. Yeah. Anything could happen. Markets could turn down. The economy could turn down, although I don't think so. he ought to be at a 60% approval rating. He isn't. It's likely to be a close election, really probably quite close, all centering around 4 states or something like that. And it's the economy pushing him ahead, and the controversial and his own controversies. We're also familiar with them, retarding him, holding him back.